So basically, this is not really a live scenario. This is a hypothesis live scenario. And I think this way of approach is way better than doing a live trading session. Because in a live trading session in one day, we can only see one or two signals from a certain trading strategies. We can't really see the entire price structures, different price structures like sideways, volatile market, non-volatile market, bullish, bearish, sentiment like that. We can't see from 1 day live session or even a 1 week session, because price tend to move into the next structures with some time. It could be 1 week, it could be few days. It depends on the sentiment changes. So a live simulation gives us a better angle on. We can immediately in a 1 hour session we can see what happens in the past 1 year on the same trading plan. So this is a better way. I will say a better way. So I always prefer to do a playback function like this. Okay. So before we start, just a quick wrap up of what happens last 2 weeks. So if you are the new joiners, you will able to catch up with us. And this could be the most important session on the past, when compared to the past two sessions. The past two sessions we lie down the concept, the foundation of systematic trading, the process, and today we'll go into the trading strategy. Okay, so before we start, we are talking about FCPO and crude palm oil futures are leveraged products in the market. It's unlike stocks, it's unlike the other financial instruments that you have been understanding or things like that. So because of leverage, the return and the losses, it could be huge. If you don't understand it depends on your level of experience. If you don't understand the price itself, the contract itself, it could suffer a loss. And this is our disclaimer for the day. Okay, the agenda, we have 6 agenda today. Okay, we'll talk about, wrap up a quick summary of what happens in the past 2 webinars. And so we'll focus on the live simulation and the results on the past, not a full 1 year in 2020. A few months was missing, but the latest data, the latest price structures and how these trading strategies perform that you can see, I will show to you. Then nothing is perfect, and we need a filter, a layer of filter, or sideways filter, okay, to overcome that what is not filtered by the Bollinger Band. Then you will have the complete trading plan with the economic calendars. Okay, so in the previous webinars, we covered this chart flow on how to develop a systematic trading plan. So basically, usually we have methods, we have ideas, and these ideas can be technicals, statistics, it can be anything. Yeah, if you look at Jim Simmons' algorithm tradings, that they even hired scientists, physician, astrology, many kind of things, because method itself, they have different way or angle to approach the markets, and there's no right or wrong. But the main objective is it must work and it must be profitable. So a method can be anything, and we will initiate a trading strategies. Okay, then a trading plan usually will come with risk management. Without risk management, it tends to fail. So usually these 3 parts are very common. People read books, people attend courses to try to find a workable trading strategies, and this is the approach. These 3 parts, these 3 elements. But a backtesting is very important. As mentioned, backtesting tells you the strength and weaknesses of a particular trading idea. If this is not doing well, the trading strategy is not doing well, don't have an edge in the market, you should stop using it. You should go back to search for the other ideas until you found a better way and is a reasonable way to illustrate the markets. Only you use the methods. Of course, with backtesting, we have data to analyze, so we can evaluate, we can optimize it, and you also must read the data precisely, accurately, okay, without biases. Now after that, okay, if you're satisfied with the data, satisfied with the returns, so we can do forward testing and potentially incubation. Okay, like what we're going to show today is actually a kind of a paper trading incubations. Okay, and later after this, only you will go live. So every methods, every new ideas, it must go through the process again and again. So there's no there's no pathway you're always going into the process. And of course, it will take your time. Okay. And it worked well because once you have the idea that match your risk objective and your returns objective, and that will be worked for quite some time. Okay. You will stay with you for long. So the initial idea of a risk reward tool with an ATL, okay, 1 ATL cut loss and 2 ATL take profit, and the buying plan is quite of a random. If you can recall, it's every 4 bar high we'll buy and every 4 bar low we will sell. So that result gives us 2 issues, okay, like what you see in the previous webinars. So the first issue, we have too much trades, and that trades across 4 years, 15 minutes time frame. It also indirectly tells us the transaction cost is very high. And the issue too is like most of the trend following indicators, trend following trading strategies, we have 50% of the winning ratio, less than that. So this is something that we can improve by filtering the noises or the unprofitable trades. So it possible to improve it. Okay, and what we've seen is Bollinger Band actually able to improve the results. Okay, if you can recall, I've tried kind of whatever indicators to try to identify our range, sideway, or low volatility period. But Bollinger Band is the best way to illustrate it. But it doesn't mean this is the only way. There can be many ways, or I'm not utilizing the strength of the others indicators that I've tested. Okay, so I didn't have a satisfied result. Okay, and I found that Bollinger Bands work very well. Okay, so today's the main filtering of noises, noise signals, fake signals, white noise, whatever you call it, it will be Bollinger Band. So Bollinger Band basically is a simplified version of a normal distribution curve. Like what we learned from the statistics lecture, but of course, after I graduate, I also forget it until I do this testing, create these trading strategies like 4 years ago. Then I remember that statistics play a significant role in trading. If you understand statistics well, you can do things more reasonably, and you can quantify things. There's a lot of things in this world you can't quantify, but with statistics approach, you can quantify most of the things. So when you can quantify the market sentiments, then it becomes quantitative. Then it can become systematic trading. And why systematic trading is important? Because it can lead to algo trading. So Bollinger Bands, you have 3 lines over there. So the first line is 20 days or 20 bar simple moving average. We call it a middle band in Bollinger Band. Then you also have another 2 line. It's kind of like it will expand or it will contract. Okay, it called upper band and lower band. Now, basically, that was the 2 standard deviations of data away from the middle band. So if the market is volatile, because standard deviation is representing volatility, if the volatility increases, the Bollinger Band will expand. So the upper band will expand and the lower band will also expand. If the market in low volatility, it means low standard deviations. So the Bollinger Band will contract. So it almost presents a normal distribution curve in a movable or a visual or a graphical way on illustrate the data. So for most technical traders, this is quite a good way to do that. Of course, this is not the only way. There are some other indicators also can do a normal distribution curve illustration in price chart. But we will use Bollinger Band today. So let me give you a quick example of why this is important. Okay, so usually we will have data like this, like a price chart. Okay, if you can see what I'm drawing here. Okay, then you have some structures like that. Okay, so during these structures, when the price continue to push higher, it means the price usually is on this 5% territory. If it go down, it will touch the lower band. If it go up, it will touch the upper band. Okay, so when the price move like that, so usually all the price, the candle closing or the high of the price, it will touch the upper band. Okay, it represents a 5% chances of the market will move higher. So you will have a Bollinger Bands is like climbing, okay, going up. Yeah, and the price is touching the upper band, like going up. Okay, and during sideways, usually the Bollinger Band will go parallel. Okay, it's because the normal distribution curve tells us that 95% of the price action is within the band, within a mean reverting scenario. So this is a middle band, and this is your upper band, and this is your lower band. Okay, so that comes to a very important clue. If the price is sideways, so any trading strategies that fall into a trend following category, you will be worse off if the market is sideways. Okay, so when will we going to trade or take the signals? Okay, so what I'm illustrating here is not only for our Bollinger Band, it can be applied to all the trend following strategies like MACD, like moving average, even Ichimoku cloud, or higher high, higher low price action approach. Okay, so it's actually the same concept, but I'm using Bollinger Band to illustrate that. Okay, so if the price is moving in between the Bollinger Band, it means the price is mean reverting. Mean reverting, it means it's sideways. Now, so the price come to upper band, go down, come to lower band, go up, like that. There's no trend. Okay. So if you are using a trend following approach, how you're going to know that? It's like moving average, it's like MACD, okay, those indicators that works very well during trend. So basically, the filter is very simple. If my trading signals come during upper band, okay, it means the signals bar must touch the upper band, then I will take the signal, because there will be another 5% chances that the market will trend when it touch the two standard deviations territory. Okay, it means the market going to move into a new territory. So if I'm going to repeat the price structures like what you've seen just now, if you touch upper band, okay, the price touch upper band, most likely that there's more chances it will go up than the signals happens during this period, during the time that the market is not touching the upper band and lower band. So this is basically the whole idea. And this idea, okay, if you understand it well, it helps you to quantify sideways movement. And if you're able to quantify low volatility sideways movement, usually all trading strategies will work very well. Okay, basically this is the missing piece of most of the trading plan. Okay, so this is some of the wordings that I have covered before. Okay, so I won't repeat it. The most important takeaway point is 95% of the price structures is moving in a range or is doing mean reversion. There's 5% chances the market will trend. And 90% of indicators in the markets are all trend following indicators. That's why people tend to have a low winning ratio without intensive filtering. And that's a sad point. Everyone read technicals, but the raw info is actually the market structures, and all the technicals indicators are mathematics average. So mathematics average of pricing, what happens is trend following. Yeah, you have plenty of mean reverting indicators in the market like RSI, like not ADX, stochastics, okay, things like that. You have that, or Z score, okay, you have that. But the problem is you must be able to identify when the market will switch on into a trend or switch back into a non-trend. That is the key. So if you see the market like that, you're able to see the market and you're able to see the market. There's trend structures and non-trend structures. You're actually almost there already, but you just need to quantify when it happens and how you're going to utilize your plan. So the weak link is a lot of people using MACD don't know the weaknesses. That's why in the previous webinars we mentioned, I show you the result of the crude oil 30 minutes and the FCPO daily, and how MACD perform in two different set of data. One is intraday and one is a long-term horizon of data. And you can definitely see MACD work perfectly in the FCPO daily, but not the crude oil very sideways structures. It's like worse off. Yeah. So these courses is basically to illustrate all these weak link that if people not aware, and you will be making some losses or making some mistake by not awareing all these weaknesses, but actually it's there already. Yeah, so just help people to realize that. Okay, so remember that our trading plans have we tested in the FCPO 15 minutes data. Okay, we have 4 years there, 2013 September to 2017 October. So you will see maybe this is old data, but actually there's no data as old, but the price structure is important. Why? Because during 2013 to 2014, these 4 years of data, the FCPO market in the intraday manner is low range, low volatility. Okay, so I'm designing a trading strategies that during the market phases of low volatility, low range. So if the market become high volatility, okay, and big range like now, so basically I'm much more confident that these trading strategies will continue to work well. Okay, I will show you the result later. Yeah. So like now, our market is in average range of like 18 point, 17 point every 15 minutes. But before that, during 2013, 2017 to even 2019, the market range every 15 minutes is like below 10 point. So we are in a high volatility structures. So in the high volatility structures, a trend following trading strategies will work way better. Okay. So if you can recall the trading plans we will talk today is like a Donchian channel things. We will buy when the market is 4 bar high and we'll sell when the market is 4 bar low. So when we tested that initial buy sell logic is not so good. It's profitable. It's not so good. Remember the winning ratio is low, and you have 2,800 of trades, which not very good because your transaction cost is very high. Then exit is very straightforward. We just follow a risk multiple of 2. So where the entry point, okay, 1 ATR away from your entry point, it will be your cut-loss point, and 2 ATR away from your entry point will be your taking profit point. So this give you a constant risk reward ratio of 2. Okay, so by the way, if you have any questions, please type on the chat box or the Q&A. So I will come to you shortly. So before the enhancement with Bollinger Band, so these are the sample signals that happens in the initial idea. So how this happens? Okay, we have a 4 bar low here. This is like the 5th bar. Okay, so if you count backward 1, 2, 3, 4, the 4 low is here. So this is a valid sell in the initial idea. So once it's sell, look at the ATL here. So the ATL that time is like 6. So you have 12 points to take profit here and 6 points to cut loss here. So this gives you a constant risk reward of 2. Okay. Yeah. So it happens to all these trading strategy as well. Okay. Yeah. Then with Bollinger Band, there's only 2 signals valid. Okay. It means the Bollinger Band actually filtered out 1, 2, 3, 4, 5 signals from 7. Then only 2 signals was there. Okay. So basically, there are some trade-off when you always do something in life is same, in trading is the same. So when I give up the 5 signals, if that 5 signals, 60% of the time, the 5 signals is making losses, so I'm fine. The most important point is when we do filtering, that filtering must retain the profitable trades. Yeah. So like what you've seen here, okay, this is the profitable trade, and this is not the profitable trade. So of course, this is only a fraction of the data. When you have more data, you can't judge from only 2 signals. You must have a bunch of data to judge a particular enhancement. Okay, this is just an illustration for how the trading strategy works. Okay, we will dive into it later. So basically, when doing testing, I will go very fast here because these are all very quantitative, and it actually more applicable and practical to the quantitative fellow. Those are people that can drive Python, can drive programming, and do data analysis. These are more straightforward to them. For technical traders, what you need to know is the concept. It's why I'm doing that, why I do this, why I do Bollinger Band. So there's a reason why we do into 3 sessions. Split these courses into 3 sessions is try to illustrate all the single elements. Okay. So basically, this is the testing approach. It means I have 4 years of data. I will split the data into a different set. So I will do my research development into maybe 2 years data. So the other 2 years data I will use for verification or ratification, whatever you want to call it. So even my optimization I will do in the initial data. That after the optimization I will use the other data to verify it. Yeah. So basically the outsample testing and walk-forward testing is basically work like that. Just different approach. If you go into the quants world, this become even thorough. There's more approach. It's like something that you can read like few months. Only for walk-forward testing that topic, they can read few months. Now this is just an illustration. Let's say I have 4 years data, like what I illustrate. So outsample testing means I will split the 1 year data, okay? I will reserve it for verification. I will use the 3 years data, the 75% of the data to do my testing. The walk-forward testing basically is the same approach, but not using the same data. It can be a recreate data based on random or different data set, or split the existing data into different pieces like puzzle and test the trading strategies. Okay, so basically these are the outsample testing. So it's quite years ago. Okay, so these are all the results. Basically linked to the time that I'm doing testing. So don't worry, we'll focus on FCPO. These are Dow Jones and Gold result. And this is oil result. And this kind of the old things that I was doing. I was doing market signals, but I'm not doing now for almost 2-3 years already. Okay. So by the way, this is the trading strategies we're going to use. This is the FCPO data. Okay. So these are the results during the 4 years and also include the 2019's March result. Okay. So what you can see here, I want to highlight. So the winning ratio in the initial testing is 57%. So when we include the 2019 March into the same trading plan, it becomes 55%. It could be during this period, 2017 October to 2019 March, the market have more sideways movement. The weakness of this trading strategy is low volatility period or very noisy trading structures. Okay, then because your winning ratio reduced, then your efficiency also reduced. So like every trade will earn 4.2 point, okay, during before 2017. And we earned 3.7 point in March, up to March 2019. So it's like every trade like you earn 90 ringgit. Okay, yeah, and this is before cost. And we have this is 5,100 points in the 4 years before 2017 October, and 2019 March you earn another 900 points from these trading strategies. So you need to times 25 metric tons. So this is 100 over thousands in 4 years. This is like how much? 150,000. Okay, so this is a total trade. So that you can just quickly use the profit divide by deduct your commission. You will get a net com. Okay, yeah. So basically, people asking about drawdown. So drawdown is still 69 point. It means the maximum drawdown in the trading strategies happens before 2017 October. There could be some continuous loss. This means like 70 point. So 70 point is like 1,500 ringgit. Okay, so it's manageable. Don't worry. And until March 2019, the drawdown will still remain the same. It means there's no, the weakness doesn't happen again. So you need a certain price structures to have a drawdown. It could be very noisy for a few months. Only you have a 70 point drawdown. So the same price structure doesn't repeat. So you won't see that. But it doesn't mean it won't repeat. It will come again. Yeah. Every trading strategy will have their weakness. Okay. So basically, this is a summary of the data, the trading plan we're going to discuss today. So if I plot a count curve that you can see, the efficiency basically is reducing. Why? Because you have a 45 degree here, but later somewhere around this point, it become slightly flattened. But of course, in 2020, we are still in the 2020, early 2021. So 2020, maybe it will start rising back because the volatility kick in. Yes, zero trades means break-even trades. Okay, so before we start the live simulation, just to lay down the rules again. Okay, so this is the trading plan we're going to test today. And beside that, there's some rules we apply as well. So we will apply this on a 50 minutes FCPO chart, the third month chart. We always trade the third month. And this is an intraday trading strategy. So how you see that? You see it enter after 10:45. It means if the market have gaps, you usually don't follow until you waited 15 minutes. Okay, you follow the next bar. And the trading plan will test in a way that it will close before the market close. So you will close any trades whenever you hit your profit or cut loss. Doesn't matter, we will close it at 5:45. Then if the signals in the morning, you have a signals in the morning, then it doesn't fill, the price doesn't come to your signal price, so we will cancel the signals in the afternoon. Okay, it means afternoon we won't follow the morning signal. And if you have a signal, the trading strategy gives you a signal, maybe after 4:30 or 5, we won't want to follow as well, because you have lack of time. The market only have 1.5 hour to closing, so you shouldn't follow that signals. Yeah, things like that. Okay, I will repeat this again in the live simulation, so don't worry. So today I will use TradingView playback function. Not only today, all the while I've been using TradingView playback function, and we will test that at FCPO third month as mentioned. So we will do the April one. Okay, we will do the April 16 January to 15 February. So we won't do the latest because we don't have a 1 month data yet. And now it's 6 March. But of course, you can do the same practice as well. Okay. So now I will switch my screen to TradingView. Okay, so let me set up again to show you how to plot this trading strategy. First, to do a playback, you must go to the contract month, not using a continuous chart. So we will be testing January 15 to February 15. So that time, the third month contract was April contract. So the April contract month is J. So if you don't remember that, you can just look like that. So if you type FCPO, then you click the drop menu. So you can just select April. Yeah, depends which month you want to test. You can always focus on the FCPO continuous chart. There's no problem. The reason I'm using a contract month is because the playback function will only apply or work or function during the April month contract. Yes, you can take a previous chart. So even not in the list, you can just type the symbol, like for example, I want the last year December. I type Z 2020. So here I go. These are the 2020 December. But of course, it's not all prices are important. We only want to focus on the active when there's liquidity in the market. Okay, so we'll go back to J, the April month that we're going to test. Okay, so this is the J, and the quicker way to understand this market liquidity, the active period, is actually basically look at the volume. So you see this period I have the most volume. So it could be this contract month during the 4th, 3rd, 2nd, it will be most trading. So we only want to focus on the third month time, which is the 15 January. Okay, here, and the February 15. Okay, somewhere here. Yeah. Okay, somewhere here. Okay. 15 February. Okay, so this is the period I'm going to do live simulation. Okay, immediately I know the result will be great because there's a trend. There's trends here, there's trends here, there's trends here. So in the beginning of the month, okay, this maybe 10 days trading period, we won't have any very good profitable result. Maybe here we will have some good result, or maybe here. But since 26 January, okay, after 26 January, it will work better. Yeah. Okay. Then we were using Bollinger Band. I don't know why it's still flashing. I'm not really sure, but just bear with it. And Bollinger Band. Okay. So we'll click Bollinger Band, and you look at the parameters. I never change any parameters because I'm not a kaki of changing parameters. I always believe the trading strategy edge must come from the method, the logic is not from the parameters. If you change parameters, I will upset like Uncle Roger. Okay, then average true range. So average true range, the keyword is ATL. You can just type ATL. Then the first one you will do. And ATL also never change parameters. Is 14. Okay. So here we good to go. I will delete the volume. Then we will start playback from here onwards. Okay. So this is the time that we want to play back. Okay. So this is 15 January. Okay. So I will click the playback. Okay, wait a while. Not sure why. Oh wait. Hold on a second, sir. I'm not sure why it don't work. Okay, so now it works. Okay. So we'll click the play. Okay, so to give you an experience like what happens in a real-time manner. Okay, then we will look on the signals when it happens during upper band and lower band. Okay, hold on, it's still flashing. Oh, okay. Hopefully the flashing won't wipe off our simulation. Okay, so now I play. Okay, so if still happening, I will change to the other internet access. So let's play first. Okay, don't worry. So now it's like a live simulations. So you. Ooh. Okay, so maybe I will switch. I will switch the internet access. Just give me a movement. Thank you. Okay, so I switch to another internet access. Hopefully this will work fine. Okay, so we continue the simulation. So I will just play. Okay, I will play. Okay, so we have a signals here. So this bar touching the lower band and definitely is a 4-bar low. So we will initiate a short here on this bar low. Okay, if it's come lah. Okay, then it come to this price. So at 31 point. So the ATL reading is 31 point because there's a fluctuation, there's volatility. So the peak profit is 62. The cut loss is 31. So you can either sell at the low or 1 point lower than the low. It doesn't matter. The most important thing is the price structures. It will move. Okay, so let's just play. Okay, so we haven't hit our sell yet because we park at the low side. Okay, now it's shorted. So most likely it will cut loss, I think. Yeah, so the price come back. Okay, so it cut loss. Okay, so here we lost 32 points. And this is how the live simulation works. We will illustrate to you the price structures, where to buy, where to sell, follow the trading plan. You will see the result immediately. Okay, so this is like short for 12:15. Okay, the signals come, then it shorted around 4 o'clock. So you see there's a dangerous. You only have 2 hours left before closing. So It's up to you. You want to take the morning signals, but our rules is basically we don't take the morning signals. Definitely, the signals come at before morning session. We won't carry to the afternoon session. So basically, this trade it won't be trade, but it doesn't matter. Okay, for illustration purpose, we'll keep that. Okay, then we'll continue. Okay, so this is 11:30. We have another sell signals touching the lower band. Okay, then this is a short. Then you look at the ATL. The ATL is 28 point. So 28.56 to take profit, 28 to cut loss. Okay, then let's play. So it's shorted. Okay, then it cut loss. So this cut loss basically is cut higher because it opens higher. So it actually lost 61 point. So I guess a lot of people will doubt their life, okay, on trading. Wow, 2 trades, 2 continuous trades will keep on losses. That doesn't matter. You are in the webinar, don't worry. Okay, so let's continue. See to wait for the next signal. So remember we mentioned that if the market is sideways, the Bollinger Band will definitely work in parallel like what happens now. Okay. Then suddenly we have a buy signals here. Okay, why? Because it's touching the upper band. Yeah. So this is 11 in the morning. So this is a valid signal. You park your order there. Okay, and this is 25 point ATL, 50 point to take profit, 25 point to cut loss. So let's wait. So the market doesn't come to the price to trigger yet. Okay, so it doesn't come. The market is still in the sideways structures. So basically, in the afternoon session, we don't want these signals. Okay, so Cheng, don't worry how to create a playback. Okay, we'll come to that. Focus on the trading plan and simulation first. Okay, so we have a sell signals here. Okay, sell signals here. Yeah, this is 3:30, definitely a valid signal. Okay, so the ATL is slightly rising, 24.46 to cut loss, 23. Take profit. Sorry, this is 24. So it's 48. And 24 to cut loss. Okay, so let's play. Okay, shorter. Ooh. Okay, so this trade take profit in 5:15, 48 point. Okay, so we lost 2 trades. Here we lost 31 point, we lost 61 point. Here we take back 48 point. Okay, so we're still in losses. Don't worry. Okay, so this is the end of the day, 5 o'clock. We won't take any trades until next day. Okay, so this is next day, 11:15, and this bar hit the Bollinger Band low. Okay, so we'll wait to short here, and of course the next bar shorted. The ATR was 26 point. See, the range is huge. 52 to take profit, 26 to cut loss. Okay, so it shorted, go down. Okay, so here we earn 52 point, and the market continue to go down. Okay, so there's another thing here. Okay, most likely the price will continue to plunge like what happened, but you already take your profit. Okay, and there's a few things we can discuss and we can overcome. First, it depends on your capital. If you have capital, you can do 2 lots with the signals. So 1 lot to take profit, 2 ATL, the other lots to what you call that? There's a word, trail stop. So every 2 ATL movement, you will switch your stop to 1 ATL. 1 ATL below 1 ATL from the last price, things like that. You can do some settings. So you will take profit at 2 ATL, the first lot. The second loss, you will continue to hold. Yeah, things like that. But it's up to you if you want to do that or not. There's only high volatility structures you can do that, something like now. And you see the average true range is like 20 over points. So it means there's a lot of price movement in the single intraday. So only this type of price structures you can do like that. The other time, don't try to do something like that. Okay, but anyhow, this simulation I will only focus on 1 lot. Yeah. So you see, if you trade 2 lots, the cut loss ATL will move to here, 1 ATL. So basically you earn 26 points from the second lot. Only the price continue to go down, another 1 ATL, then your stop will be here, another 1 ATL, your stop will be here. So every 1 ATL from last traded price, you will throw your stop. The system also can handle this. Either it's QST, AES, or CQG, our trading platform all can handle something like this. Okay. Then we wait for the next signal. Okay, so this is January 21st. Okay, we have long signals here. Okay, definitely it long at the next minute. So it's 23.46 to take profit, 23 to cut loss. Okay, so it definitely long at the next candle. Okay. Oh, okay, not bad, not bad. Okay, 3 o'clock. Okay, no problem. Okay, so this is 4:15 or so. You see, we give up the profit. The trade was targeting 3314 to take profit. The market price only come to 3304, and this is part of trading lah. It's like that one. Trading is like that one. There's no perfect one. You buy 4D, that 4 digit must open, man. Where got such thing one? Okay, so trading is like our life. Okay, so we will close the position before market close is around 5:30. We'll close. So we'll close here with 22 point. Okay, maybe I use the I use a closing price to close. This is 22 point. Okay, so we'll close with 22 point profit. Of course, this is what we give up, and very lucky. It's so near to our cut loss, but we didn't cut. So usually our psychology will challenge us. Should you follow your trading plan? It's up to you to experience this. This is your own journey, you know. Okay, so the next day we have a sell signal. This is 10:30. Okay. Then we have a sell signals here. Then the next bar we will shorted. Okay, shorted. So the signal bar is 20 point. So 40 to take profit, 20 to cut loss. Okay, so we shorted. Okay, I used the wrong bar. 40 take profit, 20 cut loss. Okay, shorted. Oh, wow, scary. Okay, so we lost 20 point here in the afternoon. Okay, then continue. So basically, you see the market after some big movement here. Okay, some big movement from 3,350 to 3,001, the 150 point movement, and the market move in sideways. There's a reason why these two signals we will suffer, not suffer, but a bit difficult. Because the market not trend yet. Okay, so we have a buy signal here. Okay, so basically you can see this is a higher low. Okay, and hitting this is actually a higher high and also hitting the upper band. So hopefully this is the starting of a new trend. So when a new trend comes, then we will have better performance. Okay, so this is a long signal at 4:30. Okay, guys, this is up to you. You want to follow or not? But my rules is anything after 5 not follow. So 4:30 is still not reaching 5 yet. Okay, so just try that. Since it's a simulation. Okay, and the ATL is 18, 26, 18. Okay, so the next candle we long and cut loss. So this is a risk of trading late. You see. Okay, this is the next day, and next day the market still in sideways. So basically, no very good structure here. But anyhow, this doesn't start a new trend like what we expected. This is a lower high. Then this lower low, don't know it will start a new trend or not. But anything like that is basically a good structure that we shouldn't ignore. Trading, you always have risk one. 21 point. Okay, 42, 21. Okay, it doesn't start a new trend. We have not shorted yet. The price moved back. Okay, so this signals not shorted, so we cancel it. Okay, because the price go away already in the afternoon. So most likely this day there's some good export data or whatever, so the market cannot go down. Or soy oil data. Okay, so we will just wait for the next signal. I will continue to do like that until 15 February. Okay. Okay, so we have another sell signals here. Okay, so this is 11:45. It's shorter at the next bar. This is ATR 20 point. Okay, shorter. Oh my god! You see this candle? This candle almost hit our profit. I think 3197. 3185, another 7 point, but it still go back to hit our colors. Too bad lah, huh? 20 point. So price structure is still sideways. There's no trend yet. Come on, trend, come on. We need trend. Okay. So another higher high here. Break out from the previous range. Hopefully this is the one. And this is hopefully another runaway gap that we want. Okay. So there's a long signals here. Okay. 21 point. 42 to cut, 42 take profit, 21 to cut loss. Okay. So let's see. Okay, so this bar it hit. Okay, this bar doesn't buy yet because you see that 15 minutes high is trading lower than our buy point. So the next bar hit, then start climbing is good news. And this is what we want. This is most likely starting a new trend. You see, it actually break out from the range. Okay, let me show you the range. You see, it actually break out from the range. This 2 days range or what, or you can call this double bottom or whatever. Okay, so this is a good news for traders. Okay, so the trend started. So we take profit around 3:30. Okay, then continue. Most likely we'll need to wait the next day. Okay, so 5:45. So this signal we won't follow, but this is 10:45 signals. We will follow long if it's come. Okay, 18 point, 36 take profit, 18 cut loss. So I will do it much faster, okay, because I think you have get the idea of this trading plan. So we earned 6 point here, okay, and it's still early in 11:45, so we have another buy signals here. Okay, I will do it much quicker, okay, because we can focus on the other things. We'll talk about the filter later. Okay, so this cut loss, this trade, okay, wait for the next. Okay, this is after 5, so this signal we won't follow. Okay, we have a sell signals in 3:15. Okay, so the ATR is 19. Okay, so basically this trade we will close at the closing. Okay, we won't take overnight, and the next day we have another signal, so we come back to this range. We have a sell signals here. Okay, so this ATR is 23, 46, and 23. Shorted. Come on, CPO. Okay, so this is 4:15. We take the 46 point profit. Okay, let's wait for the next. So the market in range again. Okay, we have a buy signals here. Okay, I haven't long yet because the price after that high trade lower. But let's mark the trade. Let's see if it was done or not. 44.22. So you haven't filled yet. Okay, it long. Okay, you take profit. Very good. 44 point here. Okay, 5 o'clock signals we won't follow. Okay, this is next day, 10:45. Okay, we will have a long here. This is 29-point range. Crazy, 58, 29, crazy, you know. In 15 minutes time frame, you have such a range. This is huge. Oh, we long already. We long already. This is 4. Oh my god. Crazy. Okay. So most likely we will close at 5 something. Oh, so we close somewhere here. We close somewhere here. Let me adjust the closing. Okay. So we close with a loss of 13 points that day. So the next day, this sell signals doesn't come lower, so we doesn't trade that one. Okay, and this is 3 o'clock. Or this is 3:15. Okay, we have a long signal here. Let's see if the price trigger or not. No, it won't trigger. So we need the next day. Okay. This is 5:15. Okay, it's nothing to do with us. We have a next day long. This is 23 ATR. Okay. Long, go. Oh, okay. So we take profit in the afternoon session, 46 points. Okay, so let's wait for the next signal. No trade. Okay, we have trade here. Let's see what time is this. Okay, this is 12:15. Okay, of course, this is a scary trade. You see, after that, it gap down. But this is the trades that we will take. This is a rally signal from our trading plan. And we shall follow. 15, 18, 38, 18. Okay, 30, 36. Okay, so it cut loss in the afternoon session. It could be some bad data or whatever. Then another long signal appear in the afternoon. Okay, so in trading, if you give up now, we don't know what will happen, but we shouldn't give up when we have a plan. 38, 19. Okay, see what happens. Okay, so if you give up, you will miss this big movement, 38-point movement. And this 38-point movement will cover your morning loss. See that? So this is 5 o'clock, we won't follow. Okay, so this is the next day. Okay, we don't have a sell yet because the price not touching the lower band. Okay, we almost end on the session. Okay, yeah. So it's almost end of the month. So this is the simulation of a 1 month trade. Okay, and if I going to show you the result. Okay, showing you the result. Okay, so what you see just now, the result is here. The result is 1 month from January 15 to February 15. So these are the trades that we just simulate. Okay, if you can recall some of it. So the overall winning ratio for that month is 60%. We have total 15 trades, and the gross P&L is 5,000. So this is basically all the trades, all the ATRs, 1 point times 25. We add it up, so we earn 5,000 ringgit. So 15 trades, if let's say your commission is maybe 20 ringgit, so 15 times 20 is 300. So the net profit is 4,007 for trading one lot in this trading strategy. This is January, February. Okay, so let me move a bit backward, okay, to show you more result. Okay, this is the latest result that we have in February. But what I want to show you is the previous result as well. Okay, so what you're seeing is last year, January to February. Okay, don't look at the result first, but look at the price structures. Look at the price structures. We have good trend, good following, good follow-through trend. So basically, when the price structure like that, definitely this will be good because we are doing a breakout trend following trading strategies. Okay, so this is 5,000 profit. Then Yeah, this is another good trend that you can see from the price structures. There's some go down, go down, go down, up, down. Okay, you have some good follow through trend. So you earn 4,006 that month. Okay, so when you understand your trading plan, what are the strengths, then you should be doing fine. And you also have some good trends. Middle of the month, this, okay, and also this. Yeah, this is good, but not really something like this. This is so choppy. This is also, yeah. And 61% winning ratio, 3,007 ringgit. Okay, not too bad for a month. This is also a very good month. You see, there's follow through. Yeah. So when the price structure like that, this is 91% winning ratio. This is so good. I think this is one of the highest winning ratio ever. Okay, not ever for some of the month, 91%, July to August. Okay, these are the months that have a lot of noise. Okay, you can see, but even is follow through. But what happens is it always gap up, one gap, two gap. So when the price gap up, you already you already factor in all the risks. That's why even the market is actually going up, but it doesn't favor to us because we are doing intraday. If there's a gap up, gap down, you must always aware. So still not too bad, still earns something, okay, but the winning ratio is 46. You can see at last year the ATL or on every 15 minutes like 10 point to 15 point. It's not like now. Now we can up to 29 point like what you've seen just now. This is scary. Okay. This is another month, 4,006, because we have some good trend there. Okay. Very good trend in the early of the month. Then and end of the month, we have some good trend there. But in the middle of the month, like these structures, this is the scary part. But of course, not too bad. We still have two profitable trades in there. Okay. So long you have two profitable trades, usually you can cover 4 losses trade. Okay, that's the whole idea why risk reward ratio must fix at 2. Okay, very good trend. Okay, not too bad. But this is also come with gaps. There's a reason why there's only earning 1,007. Okay, November, December. This is the worst price structures that every trader's nightmare. Okay, why? Because it's so swing. Okay, you see, it swing up, then come down. Very choppy, very choppy. Every range is so choppy. This is the nightmare. There's a reason why it makes losses, but even it's so worse, we still have a few trades to cover our losses. So it end up the 15 trades lost 425. In the market structure like that, losing 425 is very, very reasonable. Okay, it's acceptable, but this is a bad month by ending the year. So maybe you have a mood to expense your profit the earliest month. Okay, but at the end of the month, you are near Boxing Day, Christmas, near to a lockdown, the mood not so good. By looking at this, but it doesn't matter. Trading is an overall game, it's not 1 month game. Okay, we have December, January. This is earning 3,006. Okay, you have big fluctuation there. Also, you have some struggling. You have 4 continuous losses trade. Something like this period, you see. It's sideways volatility. It's not like going down like that. So this is a problem, and something like this. These are the time that our trading plan or any trend following plans will follow. We have some issue. Then we have profitable trends later. These are very good one. Okay, this is what we just simulate. Okay, so this is one of the good month, 5,000 ringgit. Okay, so I will pick up some questions if you have before we move on to the next filtering we're going to discuss. So what platform do you recommend to do such intraday trading? I use Rakuten Trade. So we are doing futures simulation here, FCPO market. So definitely Rakuten don't have futures yet. Okay, Rakuten is nominee equities account. Okay, and I'm representing RHB, so I shouldn't talk bad about other brokers. But one of the things that you can look at is Rakuten is a nominees account, and in RHB, we or some other brokers, not only RHB. Okay, we opens a CDS account for you. It means you're entitled to go to AGM. You get the dividends credited into your account. You can vote for the companies with your with the shares. You have the voting rights, things like that. A nominees account doesn't work like that. So the dividend will be late payment. And I don't know there's charges, but usually a nominees account will help you to